Hey everyone, welcome back to Republik Labs. It's David here. Gold has continued to fall but still outperformed BTC last week. Macro conditions softened following the Fed's less dovish than expected tone, which saw most crypto segments fall. Last week has delivered on news but not on the price action, and we've seen the confirmation that QT will end in December, positive talks between China and the US, and plenty of crypto-related good news into the bargain, yet the charts are a bloodbath. Let's talk about it. Let's go. First, market thoughts. October has normally been a bullish month for the crypto market. The only exceptions have been bear market years, such as 2018 and 2014. Thankfully, history doesn't suggest that a bearish October means a bearish November, but there isn't much data there. Almost every asset class in the world, including stock and precious metals, all exploded higher in October, and there must be some factor that has been holding the crypto market down. There might have been something to do with Bitcoin maybe started decoupling from global liquidity like this M2 over the summer. And aggregate crypto ETF flows turned negative last week, dominated by BTC outflows offsetting earlier October inflows that had pushed daily totals above $1 billion. And the slowdown reflects cooling demand from the micro instances that we mentioned above, and then Fed's less dovish tone and delivering the anticipated 25 basis points rate cut. But the weakness was also partly explained due to the rising of Treasury General Account, TGA. Which is TGA balance as US government spending slowed amid the shutdown. And higher TGA balances drain liquidity and have been a pressure and persistent headwinds for risk assets in recent months. So November is looking like a coin toss, because in 2021 bull, November was red, but in 2017 bull, it was green, and the crypto market is beginning November in uncharted territory. So with multiple crypto and macro catalysts which could take time to appear, that may have impact on prices. Balancer exploit. Balancer suffered a major security breach with on-chain estimates showing over $100 million in assets drained. The attack targeted Balancer's V2 pools, triggering significant outflows from vaults across several chains. The exploit appears to have stemmed from improper authorization during pool setup and allowing attackers to deploy malicious contracts that manipulated vault calls to drain funds across connected pools. Berachain halts in response to Balancer exploit and blocks the exploiter's addresses, Polygon validators censoring hackers' transactions to freeze them in place, and Sonic added functionality to freeze and zero out hackers' account. Balancer exploit is very unfortunate and more depressing than the price action in my opinion. It's not about lost funds, it's trust collapse. And the DeFi protocol is OG. Balancer has been live since 2020. Very diligent and talented team, heavily audited and widely used. Most DeFi users have interacted with the V2 pools, either as LPs or traders, and has been forked many times, and still can suffer a near total TVL loss. Please be safe out there, everyone. MegaETH ICO. Last week, the MegaETH ICO concluded and saw $1.39 billion committed, with $49.95 million raised at $999 million valuation, 27.8 times oversubscribed, and 50k plus total bidders. And this has certainly been the highest profile ICO this modern cycle, if I remember correctly. It certainly eclipses the Pump Fund ICO earlier this year, and some views $1 billion as underpriced and a free money opportunity. They opt for no lockup and likely a seller in the pre-market or TGE, and we've even seen what looks like Sybil activity to get greater than max allocation using multiple identities, and some are in it for the tech, likely opt for the lockup and maybe adding to pre-existing Fluffle NFT or Echo exposure. Naturally, from the team's perspective, the latter is significantly more aligned and represents the kind of holder base that you want to foster and encourage. And if you offer 100% of the allocation to these people, you suffer no float at TGE and this huge looming cliff unlock event 1 year post TGE. We likely see allocations to go both in order to balance this dynamic, but given the severe oversubscription, it's hard to believe even the most aligned get anything close to max allocation. For those who participated in the ICO, let's see what November 5th has in store. The entire timeline is talking about MegaETH, for good and bad. MegaETH revealed airdrop allocations with interactive experiences, and this attracted mindshare on CT. Besides the core MegaETH community members, many crypto accounts and on-chain users are eligible, so when the mainnet launches, they have free money to play around the ecosystem. Airdrop farmers always complain, but what matters more is that on-chain power users are willing to check MegaETH out. It's a huge lift to launch a brand new EVM L1 and bootstrap initial liquidity. Team will try to make the ecosystem as attractive as possible, and MegaETH hasn't revealed an exact mainnet launch date yet. Rumor is this week gonna be announced, but with airdrop claims completed, we can expect it very soon. According to Andreessen Horowitz 2025 State of Crypto report, MegaETH is in the top 10 blockchains that founders want to build on, and is the only chain on the list that is yet to go live on mainnet. That's bullish because what matters for new infrastructure is the dApps. And currently, MegaETH's official app directory lists 303 apps in the ecosystem, and you can filter for apps that are native only on MegaETH. And in practice, you won't be able to explore all of them beyond the usual protocols, but there are some truly innovative projects on MegaETH, and I recommend you to check at least one of each different categories like DeFi, LSD, prediction market, NFT, Launchpad, and AI. VC firm 1KX has run the numbers on the crypto economy after analyzing more than 1,200 protocols across 2020 until Q3 2025. They found that value distribution to token holders has gone up to the right, a return to all-time highs even if total revenues have yet to beat their 2021 tops. The trend is not uniform across the space, and many protocols still distribute net zero value to token holders, particularly newer networks which emit more token incentives than they return to investors. In total, 1KX placed the size of the crypto economy at an estimate $56 billion for the first half of 2025, and the crypto economy is also much more diversified now than in 2021. Ethereum alone did more than 40% of all on-chain fees in that year, but now less than 3% year to date, and the on-chain economy has expanded far beyond ETH mainnet. This has given cover for the app layer to flourish, even if the top 20 protocols are generating 69% of all on-chain fees right now. And 71 protocols have exceeded $100 million in on-chain ARR, and 32 reached that within a year of launch, a pace comparable only to top AI breakouts like Cursor. And Meta, Facebook took 3 to 4 years to achieve $100 billion ARR, so it's pretty impressive. The app layer is tipped to continue growing. DeFi, tokenized real-world assets, deepen wallets, consumer apps, and many more on-chain revenues. So I hope you have enjoyed this video. Give it a thumbs up if you may, and don't forget to subscribe. See you guys on the next one. Cheers.